Reminder, use risk capital you can afford to lose. E for eMoneyWizard.com and MarketWizards.com. 20th of February. I'm considering the gap closed. I've got the late close at 78, and I've got 78.75 as the regular hours close. We're advised to be paid by, excuse me, that 81. Suggested that even if we get above that first time, it'll probably come back a bit. Anybody who took the trade for the short side, trail a minute or two if you choose. I'm again suggesting don't be a pig and expect too much in any one trade. Let's go take a look at another chart. Nice trade if you took the edge for the gap trade. Unfortunately, there's not a lot of room to get to the gap, so it's a smaller trade, but it's the idea of it that pays off for you if you were taking the short side for a scalp trade today. Take a quick look. We said this chart might be helpful for the short side, running into the blue line. That was one of the reasons we liked the idea of dismissing a big move, because we're over and under. Feel the same way on the short side, not looking for a plunge. So risk two, make two is typically what we call this type of trading. And just because the range is narrow, don't compensate by doubling and tripling up on the normal size you would use to make up for a lack of travel range. Easiest way to get yourself in trouble. Typically better odds buying in the green zone and selling in the tomato colored zone up here, coming back into the middle. Anybody that's got the symmetry trade and paid for sure by 78. And once we start down a road, we have no idea how far it's going to go. But we do know this. If we're playing hit and run, as I've suggested today, we're better off putting a few points in our pocket consistently, a couple of times a day. And even today, this is the type of day where you want to save your powder for later. You want to grab a few points if you can, and then you've got some risk capital from the market to use to try for a bigger trade. So I do not encourage over trading this morning. This is the look inside yesterday's range, and first objective up here for the longs that the shorts will try to defend that zone. And then down here, same idea back here for the short side. So this is a look at so far an inside day inside yesterday's range. Big boy is probably in this trade if we can get another point or two. If not, we know this is just a little contra reaction to this thrust. And in any event, the best odds trade really is for the half gap and gap, and not necessarily to cross this zone and come all the way down here. And only hindsight can tell us for sure. If you're looking at this chart, for example, you can see that we're coming into the pivot point and we're coming into rising moving averages. So that tells me to be conservative with my expectations on that trade. You got to look at a number of charts to see different perspectives. And we still have the rain line support on our 15 below us. So usually you'll have more traders that will agree with you for the gap trade than for a second thrust. Hit and run. Very, very small range. Today's the type of day we could break both sides of the range from overnight because the range is so small. Do my best to try to help show you some of the things we look at. Let's take a look at a little bit larger chart. So here's a 3-day look. You can see how much time, according to Murray, which we use for our predictive model, Murray Math, 40% of the time the market will spend in the pipe, which is where this blue circle is. And if we bust one side, then we look to the next line right here as our immediate resistance that needs to be taken out. And then if it does, obviously the last one, and then the high. And normally, you're going to have a setup that takes out the high, and you need to get by a double top. But usually there's going to be a zone that we call like a third time through trade. Not quite obvious on this chart. Normally, though, it'll stick out like a sore thumb. You'll say, okay, that's the third time through trade. And for now on this chart, I would have to say probably one, two. You see those two over here. Here was a breakout, but it came back in. But still, this is a level that you can kind of call a third time through trade, trying to get above and squeeze above it. This high, this high. We busted, but then we came back through yesterday and found deeper support. If the boys really want to squeeze, they're not going to bring it back down here all this way. They're going to keep it above that third time through and keep squeezing to another target. So it cautions me about expecting too much ahead of news today. And a reminder, yesterday's high is in play, and we had selected the 92, 93 as our backstop, right? 88 to 92. Let's go back and we'll look at a couple other charts too. But this is an important chart. Gives us the range, shows us levels of support below us, and shows us this huge bar. There's a 15-minute bar. And so far, that's been respected pretty well. And then below us, if we go back and look, you can just see this rocket. So this has been a high-level base. That's all we know right now. High-level base that's being built. And the news will affect that later. So we've been at this about 45 minutes, got a very narrow range, got a double top area right here at 82. And as I'd suggested earlier, it's difficult to think about this as a home run type environment ahead of news. Probably the biggest surprise here is they didn't bust this by a tick or two. You know, I mean, that's typical, and try to catch Charlie going, you know, Charlie the turtle, and then come right back down. So very tough range for anybody that's looking for a big move ahead of news. And pretty much what we had suggested, think small if you're going to trade at all. Here's our RTH range. And all I can suggest to you is on a day like today, you don't want to overthink things. There's so much more opportunity usually later that you want to keep your head clear, powder dry. If you're blessed with a few points that you can use for risk capital, you're ahead of the game. And if you're relatively new to the business, you're probably better off just watching news events and learning from them. And truthfully, you look for overreaction areas and then add a couple points to that where you think it should stop because it usually won't. And then you take a contra because we suggest being flat for news. So far, that 78 to 79 and a half zone, it has been holding. And we'd say above that, the market is trying to bounce, and below that, market's searching for support. And I would suggest caution this afternoon. We'll review that. It's always easier if I'm here to help with those ideas, I think, but today is just one of those days that I have committed to my wife. She deserves it. She puts up with me. Maybe here we get that little break I was talking about. You can see so far that we're over and under the blue line, so we know it's fairly neutral. We've got a little wedge here, these higher lows. I still think this guy right here is our control. That post right there. That's got to be our resistance. Take that out, anything goes. And I'm not expecting a big move this morning. And if you want to do the same thing over here, put it over here. Because that guy is controlling the upside right now. Gap, remember your gap way back here. We got all kinds of gaps. Zeke is the gap master. He's probably got him going back all the way to 900. Yeah, I can't disagree with that. The question is how much travel room, because these are very small bars. This was yesterday's late afternoon plunge, excites the bears, but we really go no place. And it was a profit-taking swing. And you can see today this is still being respected, that range. So don't read too much into this. This is a very neutral environment ahead of news, and hard to imagine big boys putting on big positions ahead of news. What do I know? I'm not a big boy, so I don't know. But from my perspective, it's hard to see them just after the run we've had putting on a lot more risk, unless they know something, and probably some of them do.